Hello, everybody. Welcome to Livevol, Trading with Livevol. My name is Stephen Choi. This is where I trade my Reg T account using LVX, and you guys can see what I do. So I didn't do any trading today, so I'm pretty flat. Yesterday, I did some day trading on the SPY puts, and basically all I did was lose money. But I talked about that on yesterday's video. Today, just to show you guys the difference, looks like the market's actually reversed. So if you look at the SPX and the VIX, looks like, you know, there's a good chance now that the VIX will go lower, and there's a decent chance that SPX is going to go higher. If I check all the the components, the spider ETFs, like the industrials. This is basic materials, utilities, technology, financial. They all look like they kind of reversed, right? So the thing I kind of want to show you guys is this is, make sure you go back to SPX. This was yesterday when I did the broadcast. So it looks, see how negative it looks? And literally today, it looks completely different. So one thing about technical charting is all the patterns seems super obvious when you see it historically, not so obvious when you're going through it. So it is, I don't think it's much science as an art form, right? Because it's a way of recognizing patterns and behavior, and essentially there's many ways you can look at the same data. But other than that, it's one of the reasons why I don't want to hold it longer than for a shorter time, just because of my current situation. So if you look at my account, I don't have that big of an account, like around 100 grand. So I don't want to put a big trade on and hold on to it and suffer like 10, 15, 20% losses just because I was stubborn. So I'm more into getting in and out quickly currently, which is vastly different from how I traded before. So one of the pullbacks is UUP. So it pulled back a little, but looks like now it's kind of regaining. So it's one of my issues that's doing pretty well. UUP, I have these calls that are kind of done really well for me the past few days, right here. And then I have these puts kind of to offset it. Right, so I have the March 27, 25.5 put, and basically these put are pretty much going to be dependent on what the Fed says to next week. Most likely, if they're not going to tighten and they're going to leave the language of patience in, you might have a strong pullback on the dollar, which means that these might actually get a decent pop. So they might offset some of the losses that I will be gaining, getting from these January calls. The other one is Voya. It recovered pretty nicely. I'm having a pretty good day in it. I talked to you guys about it before that this was one stock that I wasn't like really concerned just because it had these dips, and I just didn't know it was gonna come back so quickly. It's actually, I should actually buy more just because they tried to sell it off and they couldn't, and now it looks like the companies that did pretty well passing the stress test might actually get a good pop. So I might actually be willing to buy some more of Voya just because of the strong bounce, right? So even though the market, so if you look at this date here, March 9th, right? It's actually back to where it was March 9th, And if you look at the SPX, March 9th, it was up here, 2100. Now it's only recovered a little, but Voya made a full recovery, which means, Voya is just relatively stronger than the market itself, or at least that's how I view it. And my thinking is that it might actually have another leg up. So I'm strongly contemplating maybe doubling down, just because it sold off and it only went down to here and it bounced back so quickly. But that's kind of still up for debate. Let's see, none of it traded. I'll actually put in a 5 lot. And see what happens. Okay, so I put in a 5 lot. I probably won't get filled unless we drop off in Voya's stock price, but that's that. As you guys know, I have a long-term view in Yahoo, so I wanted to buy some more calls, but I have not been able to get it yet. The lockup period comes up the March 20 something for Alibaba. I think 27th maybe. Not sure. 18th. Well, anyway, it's coming pretty soon. The reason I'm not as involved is because I'm having a long-term view, so I want to kind of keep adding on to it and wait for a pop. So I'm thinking of maybe adding one more right now, but let's see. All right, why not? Okay. All right, so I have this 640 bid here that's mine. So we'll see how it goes. Okay, so that covers pretty much most of my stuff. Oh yeah, the other one is the Twitter, where I did the call spread. Looks like so far so good on these March coming in. So most likely I have a good chance of doubling my investment. So for those of you guys who don't understand what this is, it's a lot of the call spreads I do, where if the stock stays the same or better, I double my initial investment. Okay, now on to the stuff that I wrote about. So a lot of times when there's all this experts saying that you should invest outside the United States. The only problem is, I agree with them, is the fact that you invest outside the United States, but due to the currency, US currency going up, if you invested in just your regular ETFs, I think you wouldn't have done too well. So a prime example is maybe this EWJ and EWG in Germany, right? Compare that with, this is Germany chart, this is the hedge, and then this is Japan hedge. So you see how like the ones where you have the currency that's hedged is far outperforming. And so I want to kind of go through you with a couple of, so DXJ is the Wisdom Tree Japanese hedge. I like the small caps one as well, DXJS. This is the hedged small cap Japanese stocks. I think it's pretty good if you want to be more aggressive and have a more aggressive viewpoint. You can do that. This is the European hedged. And then recently I actually saw this new one, which I like. So it looks like it hasn't been around too much, but it's the Wisdom Tree European hedge small cap. This is the prospectus when you go there, so go ahead and read it. And these are maybe like the stocks they have. They concentrated on industrial, discretionaries, financial, materials. Everything I think actually is good, especially if they go into a massive QE. And then here you can see the country allocation on where they have most of their concentration, right? So I'm liking this EUSC because it's like it's almost kind of like the IWM when the QE started. So if you want maybe something that has a little more beta, but or just basically has more upside, but also probably has a little more risk. The other one is DXPS. This is the United Kingdom hedged equity fund. So the one thing with FTSE is they're not in euro, they're in their British pound, and they have been more in conjunction with the way the Fed has acted versus with the way European Union has acted. So they're kind of ahead of the game. But if you were interested in the FTSE, this would be one of them. So these are the ones that I am interested in. I'm waiting for a pullback, especially on the European wisdom tree equity. Maybe this was the pullback right here. I was kind of hoping to get it around like 63, but I didn't know that this little dip right here was actually the pullback, and now it looks like it's gonna rip on higher. So I'm not sure. It could be that I actually jump in right at the time when it rolls over. Right now, I'm just kind of being a little more patient and wait for pullback, significant pullback, and then I can kind of start putting in my positions. But those are the ones I'm looking at. Go ahead and check it out yourself. All of them are wisdom tree. So all the hedged indices, I think, is the way to go if you want to invest outside the United States. Obviously, if you think that the dollar is also going to pull back, I wouldn't trade the hedged ETFs. I would trade the non-hedged, because if the US dollar weakens, you will actually benefit from that exchange rate, as well as the index going up itself. So hope everything is going well. Right now, I don't really have any plans. So just to show you guys, yesterday I was bearish. Today I'm kind of bullish. That's how fast it changes. But not sure if I want to make any significant bet. Even though if you look at these dips, right? Like you see, like once the market turns around, the last was it 1, 2, 3, 4, 5 times. Once it turns around, then you actually have like 3 or 4 days of just massive rallies, right? Here was the shortest, which was only 2. This one was 4 days. This one was like pretty much for like a whole month, and then this one was for a month too. So you're gonna have these rallies. Historically, that's what's happened. Not sure if I'm buying it right now. That's gonna happen, but in the end, we'll see. I am tempted to buy some calls, but like I said, I'm not really 100% confident that we're actually going to go straight up, and that we're not going to maybe roll over. So like even today, it looks pretty good here. If it ended here, it might look a lot better, but you could actually sell off at the end of the day, and that would actually look pretty bad for tomorrow, right? So we'll see. Looks like everyone's kind of waiting for the Fed next week, depending on what they say. So for now, if you have some ideas, go ahead and trade it. But in terms of the market, it's still kind of, to me, it's kind of still in limbo. Even though I'm kind of leaning towards the bullish side. All right. Hope your trading goes well, and I will talk to you guys tomorrow. Take care.